Good afternoon. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Patakia. With me, as always, is Vivek Iyer. Unimpressed are the markets. Besides the rate cut, the change in stance, no recovery seen from lower levels. A slight recovery, but still significantly in the red is the index as well. The Nifty Bank too still in the red. The Dow futures, though, have recovered substantially from the lows. They were down 900 at one point and now trading in the positive territory after China urged dialogue to resolve the tariff issues. But the big event of the focus point of at the start of the show today is the fact that Indigo has announced a common loyalty program between Indigo Blue Chip and Accor Life Limitless members. Now, Interglobe Group has partnered with Accor to create a fast-growing hospitality enterprise. Mangalam caught up with Sebastian Bazin, the group chairman and CEO of Accor, and Rahul Bhatia, the MD at Interglobe Enterprises, to discuss about the tie-up. He began by asking about how hospitality and industry is managing demand amidst the trade uncertainties around the world. Listening.
Well, there's certainly no uncertainty when it comes to India. I can tell you, and I'm probably going to be right for the next 20 years, you're going to have a fast-growing travel hospitality market being developed in India, only because you are 30 years late. And you finally got today's infrastructures, the financial industry, the telecom industry, the travel industry actually, who being built up for the last 10 years. And it's just time now to scale it, to go faster, but you have to do it in a local way, unified forces, agility, focus. But I can guarantee you, it's going to be probably maybe a double-digit growth demand for the next 10 years to go, domestically and internationally for Indian traveling abroad.
All right, double-digit demand for Indian hospitality industry for the next 10 years. Do you concur that the Indian hospitality, travel and hotel industry is fairly resilient to any sort of global shocks?
Well, in many ways, I think Interglobe demonstrates that it's long on India, and we are certainly very long on Accor. And to your earlier point, this arrangement has got nothing to do with what may happen in the short term. In the long term, the growth in India is only going to go one way.
All right, so in that case, if you could just, let's talk about this arrangement itself. You have been partners for the last 20 years. Now, with this formalized commitment, if you could give us a sense of what's the goal here, what's the investment that you are planning to make, and does it have anything to do with a listed Indigo player when it comes to, you investing in a business like this, Rahul?
So we had several moving parts in our relationship over the years. We had a development company, we had a management company, we had a separate investment in a portfolio alongside GIC, and all of that is getting consolidated under one unified business, which will have a clear remit of where it needs to go. Insofar as Indigo is concerned, Indigo has nothing to do with this arrangement. This is purely something between Interglobe and Accor.
And the funding for this, what are the kind of investments that you have earmarked?
Well, we've put hundreds of millions over the last 15 years together. So what we decided that, again, there's so many interests from so many real estate developers locally in India who really want to take advantage of the brand, the distribution, and the demand. I guess by putting all the operational technology together, the management, the leadership, the development, the governance, don't you worry, there's a lot of interested party who wants basically to take the benefit of what we're putting together. They will invest, each of them separately, different brand experience, all the money needed, and if needs be, there's probably going to be a few occasions where we're going to be deciding to do it ourselves. But it's really a question of multiplying the growth that we've been enjoying the last 15 years 5 times faster. And we could only do this if we simplify ourselves in terms of government and leadership, and that's what we've been announcing today.
All right, and tell us a little about the announcement with Tribo as well. You guys have made an investment in Tribo to be their largest shareholder. Together, you will be growing. Give us a sense of that.
Sebastian, you want to take that?
Yeah, Tribo has been actually created by Sid Gupta and 2 of his co-founders. It is today recognized as the best, fastest travel technology software existing. And he's been connecting within almost like 5 hours 1 hotel, and he's going from today 850 hotels under his tutorship. So we've been watching them for the last 5 years. We've been investing 5 years ago when it was like a venture capital investment. And now we realize they are the best equipped to do customer reservation system and property management system together. They are good, they are fast, they are young, they are advanced in technology. It's super important for both of us to connect Tribo technology to our own basically governance and development. And we're also trusting Tribo to go faster on two brands where they're going to have a master franchise for Ibis and Mercure. So it's kind of actually a dual track, master franchise for two brands and technology provider for CRS.
Could you give us some numbers then? You have about 70 properties in India as of now. Under this partnership, what is it that you're targeting in the very near term, the medium and long term?
Well, it took us 18 years to go to 100 properties, 70 open, 40 to be open. That's great, but that's not good enough. So we promised the market we're going to go, as of today, 5 times faster, because we aim to have 300 properties in less than 5 years from today. So we're going to go from 5 or 6 opening a year probably to 25 to 35 opening per year. So it's we know what we're actually undertaking, and I hope it's going to be better in the years to come. We in France have 2,000 hotels, and France is the size of less than 5% of India. So somebody in India will have well over 1,000 hotels in the near future. We just want to be one of them, so one of the leaders in this country.
What are the synergies that you see between the Interglobe Group and the Accor Group? If you could give us a sense on how y'all would, allow them to grow at 5 times the pace, or enable them to grow at 5 times the pace that they've been growing so far.
So operationally, Accor is a world-class operation. They understand how to operate and manage hotels. We think we understand India and what it takes to do business in the country. And I think that complementarity will go a long way between the two of us. The other thing that you have to also take into account is the relationship between the two companies is time-tested. We've been together for just over 20 years, and nothing can stand the test of time if it was not built on respect for each other, a common shared vision, and what we believe we can do going forward. So that's the bedrock of the future, and we are terribly excited about what
you're a rare voice, and we speak through you for the industry as well, and this be the hospitality industry as well as the aviation industry. From where you see things as right now, there is a fair amount of promise, but there are a lot of challenges as well. Where do you think are the challenges, and what are you doing to overcome them in both aviation and hospitality?
So my simple view on this is the greater the complexity, the greater is the opportunity. And if you can navigate through that complexity and essentially create a moat for yourself, it'll see you through for a very long period of time. And we believe that in the hospitality space, what we are embarking on, a renewed vow between Accor and Interglobe, I think by 2030, you would have actually created a moat, and then the flywheel just keeps running.
Well, a very interesting conversation there with the top honchos of Indigo. But we'll now slip into a short break. Shweta Daptardar from Elara Securities joins us on the other side to discuss RBI's move to review guidelines on gold loans. Welcome back to Midcap Radar. Well, RBI is set to release new draft rules for gold loans. The RBI governor has since clarified that he did not indicate tighter norms helping spook stocks of gold loan lenders recover. The central bank is also opening up co-lending to all regulated entities and for all kinds of loans. To discuss more on this, we are now joined by Shweta Daptardar, Vice President of Diversified Financials at Elara Securities. Thank you so much, Shweta, for joining us. First up, we have to talk about the gold loan segment. What do you make of the comments? Have you done any sensitivity analysis of what could be the likely comments, especially if there is any tweaking as far as LTV norms are concerned? And what kind of impact do you see on gold loan lenders?
Yeah, hello, good afternoon. So we have analyzed the impact of the implications of RBI guidelines. But the good part is, like you also rightly mentioned, RBI has clarified that they would be just maintaining rationalization of the norms, and there is no tightening that we can be expecting. So point number one, something which RBI had bigger concerns about is the LTVs, the on-book LTVs and the exit LTVs exceeding the origination LTVs, leading to higher over indebtedness at the borrower level. So I think, but if you go by the norms, it has always been 75% LTV for all regulated entities. But due to definitely the underlying price value inflation, the exit LTVs continue to remain on the higher side. So I think we are expecting largely RBI giving a clarification on the same. But if you look at the stocks per se, so there have been regulatory lapses by the end of few entities. However, the market leader, the topmost player in the space, that is Muthoot Finance, and we also pulled out the con call transcripts, which clearly highlighted because we were unable to reach to the management. So Muthoot time and again has clearly highlighted that they have been largely in adherence with most of the norms. And given the fact that stock, despite being pretty sacrosanct, has seen correction today, and in fact, it also recovered in the second half. But having said that, we continue to maintain a positive stance on the market leader and definitely would look at the guidelines whenever the comprehension comes through.
Shweta, good afternoon. Thank you for joining in. What may be tightening to the street may not be tightening for the RBI governor, right? That line of tightening may be subjective, but depending on where the draft guidelines come in, right? But if at all there are some kind of draft guidelines that go against these gold financiers, who do you think among the three of them is most at risk? Because Muthoot has the highest gold loan AUM, almost all of its book is on gold loans. So who is the most at risk here?
Yeah, so like I already mentioned, Muthoot largely in our assessment is much more in line or aligning its practices in line with regulatory requirements. Manappuram Finance and IFL Finance, which are other two key players in the space. So Manappuram has almost 50% of its book on the gold lending side, whereas IFL is around 21 odd percent. So these are the other two key players in the space. And time and again, we have already seen certain regulatory hurdles encompassing the business impediments for both of these names. So definitely, whenever the guidelines would come through, we would sort of articulate for all the players, but we believe it more so might impact the other two key names.
Okay. Shweta, let's move on from gold loan financiers and we'll await what are the exact draft regulations that do come about. We also want to talk to you about NBFCs at large. Are you a little surprised at the kind of sell-off that NBFCs have seen today, given the fact that the rate cut is generally seen quite positively, especially in the near term for NBFCs? Secondly, your view as far as expansion of co-lending agreements are concerned between NBFC and banks. Do you see that as a material positive? And lastly, if you do have a view on the likelihood that there could be an increase as far as the 1 lakh or 2 lakh rupee limit is concerned between customers as well as merchants, your view?
Yes, so answering to your first question, NBFCs definitely surprisingly saw a correction today. But we have to also understand the fact that in anticipation of rate cuts, most of the movement have already happened as far as the entire NBFC pack is concerned. We certainly believe more than rate cuts, what would drive the credit offtake or whether what would push the credit offtake for NBFCs has more to do with the liquidity scenario, how the liquidity scenario unfolds, and the boost which RBI is offering time and again on that front. So we also put out in our preview note, which we released recently, that the spreads between the corporate bond yields as well as the 10-year GSEC yields have been narrowing, putting forth a very favorable environment, a very favorable funding environment for NBFCs. So I think that is something which we are closely tracking. Your second question it was in terms of gold lending norms. So like I said, while
the co-lending
it's
norms,
very
yes,
clear
yeah.
now that the comprehensive nature of the gold lending norms would be more to do with rationalization and harmonization than any changes in particular, we certainly believe most of the anomalies now would be corrected as far as both banks and NBFCs are concerned. We still maintain our positive stance on the entire gold lending space. As far as the third question is concerned, so in terms of the increase in limit, See, I think where the RBI concerns are emanating from is more to do with the fintech-led arrangements as far as the co-lending arrangements are concerned. So time and
Right.
again, a larger part of fintech loans have happened through unsecured personal loans, which have grown at almost 50 to 60% rate year-on-year basis in past 1.5, 2 years. So
Right.
to
Shweta, if I
curb
could
the
just
systemic
interrupt.
risk, which largely emanates from this particular channel, I think that's where the concern is coming from the RBI front.
Shweta, do you have a view on the development at HUDCO that's come about today? I understand you do have coverage on HUDCO. Have you had a chance to look at the development? And very quickly, if you could give us the implications.
Yes, so it's a very positive implication for HUDCO in terms of net interest margins getting positively boosted now with this arrangement. But it's a long way to go. But the good part is HUDCO has now joined the bandwagon of PFC, REC, who are amongst very few companies who are now eligible to raise money at as low as anywhere between 4.5%, 5.5% interest rates to this inclusion of 54 EC bonds. But we have to also acknowledge the fact that this process is slightly long drawn. So by the end of FY26, you might not see a
Right.
very strong implication on margins due to this arrangement, but definitely going forward, FY27, slowly and gradually,
Right.
as the 54 EC quantum increases for HUDCO, more and more positives to flow in terms of margins.
All right, Shweta, thank you so much for sparing time and joining us today on this conversation on a whole host of subjects with regards to the announcements made in the RBI policy as well as the developments on HUDCO. Take a short break, more on the markets on the other side. Stay tuned. 30 points lower on the index, the broader markets too in the red, but the bigger trigger is the Dow futures that are seeing some very, very wild swings right now. At one moment they were positive of 50 points, now they are down 200. So keep an eye out on the Dow futures and the implications that we can see later this evening. But with that, we call time on this edition of Midcap Radar. Vivek and I take your leave from the team that put this show together. Thank you so much for watching. Your stocks on the other side.